Right, welcome to another video. In this video, I'm going to talk about the most underrated company in 2025. This stock is just being completely ignored by Wall Street, in my opinion. And I've been studying this company the last couple of weeks. And the more I look into the company, the more conviction I just get built up with it. So I'm going to take my time and I'm just going to go through the details of Meta AI, Mark Zuckerberg's company, and why I believe this company is got a massive future ahead of it. It's already, one of the biggest companies in the world on the S&P 500, but I actually think the way the future's going, it has even more potential. So, right now, everyone is so focused on Nvidia. Nvidia's taken up all the attention on Wall Street. The whole investing stock market is just so focused on it because of the AI movement. And this is why it's the perfect time to invest in big tech companies. They're getting ignored and people are forgetting the sort of basics of business. And that's what I want to go through. So first of all, let's just get the sort of financials out of the way. The financials speak for themselves. Okay, you could look at the financials and just invest off that alone. But, as investors, we look at the future. Okay, we don't want to be someone that reacts to news or reacts to a stock price, and that's why we invest. Okay, that's reactive investing, not proactive investing. Okay, right now when I made this video, it's the 25th of August 2025. So we've just had the second quarter of earnings for Meta. Revenue 47 billion, okay, up 21% from the quarter of last year. Net income 18.34 billion, up nearly 10% from the last quarter. Net profit margin 38.59, up nearly 12% from quarter two of 2024. So we've got a PE ratio, price to earnings, of 27, and more importantly, price to free cash flow is 36.47, right? So the free cash flow that I always use off the 10K report. The 10K report has the official free cash flow that's declared by Meta, and it's over 52 billion. Okay, so at the point of this video, market cap's 1.9 trillion. Your free cash flow is 52 billion. So price to free cash flow, 36. So these numbers alone are just ridiculous, okay? The fact that a company that's already a mega cap company is increasing its revenue by 21% is just off the charts. It's acting like a startup company. That's what's so impressive about Meta and so impressive about Zuckerberg. To put it into perspective, okay, Meta makes more money as far as net profit after all expenses. In one quarter, it makes more than what Walmart makes in a year. Coca-Cola, Ford, even Berkshire Hathaway, what it makes in 1 year of net profit. These companies, Meta does it in a quarter, right? And to just put it into perspective, okay, Meta is currently cheaper than Microsoft, AMD, Google, Amazon, Broadcom, Eli Lilly, Nvidia, ASML, Visa, Costco, Walmart. Okay, it's cheaper than all these companies right now, right? So this is what I'm saying. Everyone's so focused on Nvidia. But what I'm about to say is going to make complete business sense why people need to be looking more closely at big tech rather than just so focused on Nvidia. Right, so the number one reason, Mark Zuckerberg, right, he is the number one reason right now. I want you to try and name me a founder who's currently the founder and CEO of a big tech company. There isn't any, okay? The only other one is Jensen Huang from Nvidia. Now he's currently 60, but Zuckerberg's only 40. He's in his prime. He still has a long way to go. Now you want the founder, ideally with a company, you would rather the founder as the CEO is still active in the company. It does, he brings so much more aggression to Meta. And that's what Mark Zuckerberg is. He's aggressive. It doesn't really matter what you personally think of him, okay? He gets a lot of stick on social media. People are like, oh, he's not very sociable, he's a bit awkward, blah, blah, blah. Who cares, right? None of that matters. Do you know what matters? Does he get your stock price up? Because when you invest in a company like Meta, you have Mark Zuckerberg on your team now. He's on your team. He's going to increase shareholder value. And if you're a shareholder, then you start to care about how his aggression is, how his tenacity is to get results. Because I promise you this, That's one thing he brings to the table, is he's aggressive. He's just currently hired all the top AI research talent in the industry. You know, he's willing to make massive pivots on his business, which is something that's so important in technology companies. You have to be willing to change with the times. Look at all the companies that didn't adapt quick enough. That's something that's so good about Meta, is it's always willing to adapt. Now, he has been punished in the past for this, right? Because of Metaverse. Metaverse didn't work out, so Wall Street are still holding that against him. That's why I don't think Wall Street's really taking what he's doing right now seriously, when they actually should. Because as far as AI, Meta has the most potential with AI, and I'll explain. Right, so Nvidia, right. So who's Nvidia's biggest customers right now? The biggest customers for Nvidia are big tech, right? Google, Microsoft, Amazon, Meta. They're buying the GPUs. They're buying the hardware for the future, okay? People seem to forget big tech are not just buying GPUs for the sake of it, okay? They're buying it as an investment. They will expect a return on this investment. So every GPU that is purchased for $10, right, it's a lot more than that, but for every purchase, they're expecting a return on that investment in the future. It's difficult for Wall Street to price that. What's easy for Wall Street to price is Nvidia made, 60 billion or however much it may be, 60 billion in this in sales. So they react to the earnings, buy the stock, okay, and the stock price is going up. I mean, Nvidia's trading at wild multiples right now. Don't get me wrong, Nvidia's still the stock price is still going to go up over the next 2 years, no doubt about it. But Nvidia is a supplier. They are not the ones that control the customer base. Who controls the customers and has access to the customers? That's companies like Meta, Google, and Microsoft, Apple. These companies they have the customers. That's where the money is. A supplier doesn't make more than the company they supply. That's like me saying, if I buy these t-shirts from China and have a big business, they make more than me, even though I'm the brand. So does TSMC makes chips for Apple? Do they make more than Apple? No, right? Everyone's so obsessed with, let's invest in, the chip making companies, instead of the actual companies that own the true assets, which is the customers. So people would rather buy Nvidia, ASML, and, AMD and TSMC, rather than the actual big tech companies that have the real assets. Okay, Nvidia gets paid once when they buy the hardware. Okay, and Meta's going to keep making money off these GPUs and AI as the future goes forward. And this is something people seem to forget. Okay, they're completely blind to the fact that big tech are the ones that are going to win. They are going to have a higher market cap than Nvidia in the next couple of years. Right now, everyone's seeing an upfront investment in the GPUs. And Nvidia, okay, so Nvidia's just skyrocketed its earnings. They will continue to skyrocket again, like I say, over the next couple of years, because the bubble just keeps getting bigger. As long as there's liquidity in the market, bubble can keep getting bigger. A lot of people think the market's rational all of a sudden. Things are trading above earnings. Okay, so Nvidia's high above earnings. It's an expensive stock, so maybe there's a crash coming because the company is expensive. That's not how it goes. The same with like Palantir. Palantir's trading like 500 times earnings, and people think, there's a crash coming because suddenly the market's going to become rational and begin selling their positions. The market's not rational. The market's basically run off liquidity. Liquidity is what really matters. So, I'll tell you, right, what does Meta also have? They have the largest social graph in all of human history. Right, so they have all the data on customers, like over 3 billion users of data. What does AI need to improve, right? It needs data. The more data it has, the better AI performs. So Meta has the most social graph in human history. So automatically, it's positioned perfectly for AI. AI is going to have all this data on, from Instagram, from Facebook, from WhatsApp. All that's combined is just going to make its AI even better. Combine that with the top researchers in the field. I mean, he's willing to pay, $100 million to just hire the best talent. He's aggressive, he's ruthless, he doesn't care. He'll bring in whoever he needs to bring in. That is what Wall Street are just not pricing in. They're also not pricing in the fact that he owns 49% share in Scale AI. Scale AI is the people that actually give AI its information in a sense. So how does ChatGPT know what a dog is? Okay, so Scale AI are the ones that say like this is a dog, position and tie up the information and feed it through to ChatGPT, for example, or the AI models. So again, Wall Street just didn't react to that. They didn't react to it. The only thing that Wall Street have reacted to with Meta is the earnings. When the earnings report came out, the stock shoots up 10%. But again, that's reactive investing. As an investor, you want to be invested before this happens, the earnings come out, right? So that's the whole point of being an investor. You invest ahead of time based upon your own conviction in the company. So they've hired the best talent. Okay, here's another fantastic thing about Meta. It is a fully digital business. It's 95% digital. All the other companies, big tech companies and other companies, they're not actually fully digital, like Google, Amazon, these other companies, they're not all digital. Whereas Meta's just fully digital. It can optimize and it's so lean and efficient, which means there's more free cash flow, which means more shareholder value. To keep it really simple, the more a company makes free cash flow, the more shareholder value you would have. It's that simple. Like Peter Lynch talked about this. If a company makes money, it's going to make money in the future. That's simple enough to get shareholder value. So it's a fully digital business, unlike everyone else. And it's the only company, maybe not only, but it's the strongest company positioned for offensive AI rather than defensive AI. The majority of companies are positioning themselves with AI in a defensive way. They're going to have robots to do human work, so they save money, right? It's this program can do a white collar job, so we don't need to hire as many staff and employees, so we save money. But the revenue technically stays the same. So the revenue stays the same, but they have more profit and more free cash flow because of robots and AI, and that's the way people are looking at it. But the AI might not necessarily be making the money. But with Meta, it can do both. It can be offensive and defensive. People haven't even touched on the fact that AI sales agents, okay, the fact that what is the number one thing we know for a fact that AI is good at? Without question, right? From what I've personally discovered is that the best thing AI is good at is communication and persuasion. That's what we know I know that for an absolute fact because we know that is what's happening with ChatGPT, with Gemini, with all these chatbot models. That's the number one thing it's good at, above everything else. So how does that tie into Meta's business model? Can you imagine an AI chatbot that knows the user so well because of all their Instagram activity, their Facebook activity? It knows the user so well, so it's like almost like a warm conversation straight off the bat. Whereas if someone just picks up ChatGPT just now, ChatGPT has to build that rapport. Whereas Meta has the positioning to immediately have rapport with these customers and these users that are speaking to its chatbots. Okay, so can you imagine AI sales agents? So customers are looking at holiday bookings on Instagram, for example, and they use the Instagram Meta AI to I need help trying to book this holiday or trying to book a hotel, and Meta starts, the AI starts assisting the customer with their purchase, and it can be anything. It can be products, it can be booking holidays, booking flights, anything, right? Okay, and it's going to know exactly what stage of life the customer's at as well. It's like I'm moving in, I'm just having a child, or I'm moving into a new property, so I need to purchase furniture. And advertisers will pay so much money for this, as they already do, okay? The numbers speak for themselves. If Meta wasn't making its actual customers' money, right? The advertisers' money, these numbers wouldn't look like this. The AI is already working, not directly speaking to the customers yet, just through the activity. AI can track what someone's doing on Instagram more than doing it manually with humans. Okay, so the AI is already optimizing increasing their profit margins, increasing their revenue, increasing their net income. This is before sales agents are even getting used. Not even to mention WhatsApp. Okay, WhatsApp is like a gold mine. Zook is so strategic. Meta, they're very strategic. They'll purchase something like WhatsApp and not do anything with it. Just keep it there. Keep it there. Everyone's using WhatsApp. Everyone's using WhatsApp. Over something like 3 billion users. Now combine that with his plans to build like Manhattan-sized data centers, and combine that with sort of AI models on WhatsApp. That WhatsApp could essentially replace full call centers easily. That alone there is billions and billions in revenue per year. You know, think of all the businesses that use customer service call centers. Okay, you've got like banks for a start. Okay, banks spend billions on customer service. Can you imagine? They just says, look, just WhatsApp messages, so customers could just message on WhatsApp and speak to, say, their Bank of America, and they have a conversation. Look, I need to check my balance. I need to check this, and they could feed that through using WhatsApp. So you could start communicating with businesses just using WhatsApp. Not even need to phone up and speak to a call center, because again, the AI is more effective at a chatbot. Okay, so WhatsApp's just sitting there like a gold mine, and Meta are sitting there with that WhatsApp. Potential of income again is exponential. So looking at all this, right, the challenges, right, TikTok is obviously the number one challenge. Now TikTok, from my experience, it's a lot of younger audience. Those younger audience don't even have a buying power anyway. See, if older audiences are on Instagram, they're the ones with money. See, Gen Z and the next gen, they don't really have any money. So they're on TikTok. I don't think TikTok is making as much as Meta. I haven't really checked what their actual earnings report is, but I know that TikTok isn't really a threat because it's potentially getting banned in America. It's either going to get banned or it's going to get sold to an American company, both of which actually Meta still wins. If it's sold to a US company, the owners of TikTok, ByteDance, will not give up the algorithm, and the algorithm is its main asset. So without the algorithm, you've just kind of got the shell of the platform. So either way, it's not going to be as effective as it currently is. And again, Meta wins either way. The thing with Meta is they're so aggressive, they immediately brought in Reels. So if TikTok starts picking up, if they can't buy the company, just do Reels instead. Antitrust. This is obviously happens a lot with Meta. You've seen Zuckerberg get grilled in front of Congress. But again, the fines of the antitrust are sort of negligible in comparison to the free cash flow the company generates. So it's like the cost of doing business for Meta at this point. The main challenge, I believe, is execution, okay? Because what we don't want to happen is like Black Mirror vibes. So if you ever watched the Black Mirror on Netflix, like where these creepy chatbots are sort of cold messaging people on Instagram and stuff and saying like, oh, you looked at this holiday destination for a little bit. Are you interested in me booking flights? So listen, Meta's far too smart to do that. It's far too smart, it's far too patient and strategic for that to happen. So I don't believe there'll be an issue with the execution of this. I think they're so patient. What will happen with the AI is similar to what's happening with ChatGPT. It's just so useful that people want to keep using it. They want to keep using it, and it becomes more useful, it becomes more trustworthy, and eventually it can start, introducing products in there to that customer that's relevant. That's the most important thing. It's not like it's just trying to shill some random product like TikTok Shop. Have you seen the people in TikTok Shop? It's just random people trying to sell random things like, here, do you want to buy this tripod? Right? Like, it's the most ineffective way to sell anything. The most effective thing is someone that's already in that stage of life where they're looking for a certain product, and that's what Meta is going to have. So say if a customer that's just had a baby and they're moving into a new home, they're in a stage of life where they're looking for certain products. And so Meta has all these customers in this certain stage of life, and they can connect them to advertisers that are appropriate for the customer. And combining that with the AI sales agents, you're talking such increase in revenue and net income that I really do see that Meta has the most potential with AI than any other big tech company. You know, the reason I think Wall Street are just not giving Meta the chance is because of the whole metaverse thing, okay? You know, the thing is, like, metaverse, you never know, okay? If something picks up in the future and people use it to make content and stuff like that, you never know, right? It might, the infrastructure's there if they want to pick it back up. But because it didn't really work out, Wall Street are still like doubting Meta with this, okay? So I think that's, you know, but who cares, right? I don't care about that. It just shows me that Zook is willing to constantly try new things, even with such a company that's already this successful. He's still willing to pivot, to try to push it forward. And he's, you know, he is the youngest founder and CEO of all big tech companies. You know, like I said at the start of the video, Nvidia is the only one that's still got the founder and the CEO. So I'm dollar cost averaging into Meta, no doubt about it. The financials just speak for themselves. Okay, this is like a more of a smart money move. This isn't like a speculative AI play. Right? The data's already there. The numbers speak to themselves. Go have a look at the financials and, you know, see what you think. But anyway, not financial advice, just my opinion. This is what investing is, right? You're looking at the future. We don't react to things. See if you're looking at a stock and it's went up like 50% over the last year and that's why you buy it. You're just partaking in the bubble, right? And listen, there's money to be made in the bubble. The bubble's actually, we're right at the start. That's where we are right now. We're right at the very start of the next boom, right? Right now the market has a lot of liquidity in it. They're front running the Fed. Okay, the Fed are going to cut rates. They're just taking their time a little bit. Jerome Powell is holding things up a little bit at the start of 2025. Obviously the tariffs were announced. All this does, right, is give you as an investor more time to invest in companies. The rates will be cut, whether it's next month, next year, after that, they'll eventually go back down to lower levels and the asset prices are going to go up, okay? So I'm not worried about how quickly rates get cut or what's going to happen there, but I do know that over the next couple of years, the market will be priced pretty high because liquidity is so active and pumping into the economy, into the market. So anyway, I'm going to make more videos, and if you like it, you know, comment what you think of the thesis, subscribe to the channel, and I'll make some more videos.